We are in studio today with Frank Holmes, founder of U.S. Global Investors. Frank, thanks so much for being with us today.
It's great to be here.
So let's talk commodities, Frank. Hard first half of the year, silver losing a third of its value, gold losing 1/4 of its value. What's your sentiment today?
Well, the big factors that drove that are two things. I always say the love trade and the fear trade. The fear trade is highly related to the strength of the dollar or the weakness of the dollar. And we've seen a great dollar rally, which will impact all commodities. The love trade has also been impacted. And you're seeing in India doing everything to try to stop gold imports. And at the same time, you're seeing GDP per capita in China and India has gone flat. That does impact the marginal demand for that love trade. But the positive news is that we're in the historical cycle for the past 35 years that gold bottoms in July and starts this run in August, September, October, and we'll have during, and when you look at Asia, different types of religious holidays that all go through, gold will peak in February.
Okay, so Frank, let's focus on that love trade a second and Asian demand. So we're seeing more and more banks opening vaults in Singapore, for example, just the latest, an Australian bank opening one this week. What are you seeing regarding Asian demand for gold? Because, like I said, we're seeing mixed reviews. Are they buying or not?
They are buying, but you want that huge middle class, and then you want the all classes consuming, not just the wealthy people buying gold. Then you need the rising GDP per capita. Now, what you are seeing around the world is luxury goods. And luxury goods at the high end, Michael Kors,
right?
Purses galore, right? Taking off, new highs. Prada, new highs. Ferragamo, new highs. So the luxury good, that higher income level around the world is spending money. And they're the ones that are looking for their own vaults for their gold to protect them against currency depreciation. However, that other big spike that is taking gold up every time has been for religious holidays where people buy 1 gram of gold.
But over in India, for example, we have the Indian finance minister who was advising people don't buy gold. They're putting, high tariffs on gold. They don't want gold coming into the country, basically. So why do you think there's this hesitation from governments?
It's always interesting because governments recognize that gold will expose poor policies. That's all gold really, that's your insurance against poor monetary and fiscal policy in any government. So any government that basically has negative real interest rates and is devaluing the currency by monetizing debt, gold will appreciate slowly, not always straight up, in that country's currency.
Okay, so Frank, we're obviously seeing a lot of bearish sentiment towards gold right now. People speaking about $1,000 gold or even falling below $1,000. Do you think that this is just a temporary correction? Are we in a longer bear market? What's happening?
Well, this bear market's going on for 2 years. I mean, if you take a look at the redemptions that have been taking place, it's only just accelerated. And you could actually say this is a catharsis taking place, a cleansing, because you have an all-time spike in people shorting gold. In addition to the redemptions, but you're having physical demand remain robust. Physical demand of gold COMEX going over to Shanghai Exchange, physical demand for people trying to buy gold coins, silver coins, they're very, very healthy and robust. So I think you're seeing a transition from the financial players in the gold market to those that are the physical players, and they're just slowly buying gold.
Okay, so you're seeing this as a buying opportunity now?
Yes, and the annual seasonal pattern is that it usually rises between now and February. So you have two things that to consider. The other last thing to look at is the dollar. The dollar has been incredibly strong. And anytime that happens, then all of a sudden exports start to drop. And that takes place, and the dollar will get weak in the next half, and that will be good for all the currencies. But this idea of the super cycle like we had in 2004, 2005, and 2006, you need to have Europe, where the PMI, the Purchasing Manufacturing Index, is rising 1 month above the 3 months. You need, in fact, the whole world. And back at that period, prior to 2008, we had America on steroids. We had Asia booming with massive infrastructure projects. And Germany and France and Italy and everywhere in Europe was very strong economies. That is what gives you that huge all commodities rise. Mm-hmm. Now there's going to be rotations that all of a sudden gold will have its rally, then it'll be iron, and then it'll be zinc, and then it'll be silver. And right now I think the hot commodity rate in the precious metals arena is palladium.
Okay, palladium, yes. But let's look at the U.S. dollar a second. We'll get to the PGMs a little later, Frank. Are you bullish on the U.S. dollar?
Temporarily, yes.
Okay.
I think it's had a great run here, but I don't really see interest rates. We had a spike in the 5 and 10-year government notes in America. Mm-hmm. The money market funds, they're only up 1 basis point.
Okay.
inflation is still, you're losing money buying anything short term, and it's the magic number has always been 2%. So whenever the government will pay you 2% over the CPI number, then gold becomes unattractive as a monetary asset.
And are you paying attention to this talk of tapering, Frank?
No, I've been paying attention to it, but I don't think it's going to take place the way people are all speculating to the degree, because I think that still the economies are very fragile and they quickly start to taper off.
Okay, and are you going to be paying attention to who the next Fed chairman will be, or woman?
We'll see who that comes. You know, that's it'll be what it is, and we'll see what their policies are. We just try to adapt to government policies as best we can, and we look at both monetary and fiscal policies because we believe that government policies are a precursor to change.
Do you think one pick would be better for gold? If we had to look at Summers or Yellen or Cohen?
No, I don't think it really matters. It has other factors what they're doing. I think one of the big factors is going to be excessive regulation. Is going to make it very difficult to have a booming economy. What people don't realize is that when gold in the 90s was $250 an ounce,
right,
and President Clinton was in charge, you had deregulation. You had massive deregulation and unleashing of the internet, and you're earning 2% over the inflationary rate. Mm-hmm. So now we have the inverse of that, and I don't see a whole lot of change from that.
All right, so let's focus back on gold a second. Before you said the magic word that's shorting, and basically as of July, you wrote in your last commentary, the number of outstanding gold short contracts was close to 140,000. That's what this chart demonstrates over here. Tell us a little bit about that play on gold, Frank.
Well, in the capital markets, they call that a crowded trade. When everyone is, this huge, what they call an exponential move of everyone being long and bullish or extremely short. And it seems that this is an excessive shorting position taking place. And what's happened since that date has been the exposing of banks owning warehouses for the commodities. And these allegations have been going on for a long time regarding the GATA and the gold markets and the silver markets, et cetera. So now I guess it's showing up for aluminum and copper and things like that. So I think that that's going to create a transition.
Okay.
I wouldn't want to be short, and then, by the way, that was pretty well the bottom in gold.
Okay. Also in your commentary, you mentioned how you agree with Credit Suisse that basically commodities will now have to be looked at individually. Are you referring to gold and silver where we used to look at gold to see where silver would be headed, or what do you mean by that, Frank?
Well, silver's always been the warrant on gold, so the higher beta. So if gold goes up 10%, silver's going to go up 20%. If gold falls 10%, silver's going to fall twice that amount. It's just always been that historically. And I think that you're seeing that gold and silver, I believe, will still move in the same direction, the sentiment.
Okay.
But platinum, palladium will be different than what's driving gold and silver.
Okay.
And copper. Copper is going to be very fundamentally different than what's driving gold.
Okay, so you said you like palladium. You're buying it now?
Yes.
Okay.
We're long palladium.
Long palladium, all right.
And there's a couple of big reasons for that. One is cars, that the average car on American roads is over 10 years. That energy prices are much higher, and the only way to get fuel efficiency is to buy a new vehicle.
Okay.
And new vehicles you can buy at next to no money. So banks are all there facilitating inexpensive 2% cost or less than that to be able to buy a brand new car, and it allows the driver not to be able to feel gouging on his payroll because he gets more efficiency. Well, those trucks and cars, and you take a look at still emerging markets are still very healthy. They all need platinum and palladium is a special commodity.
Gosh, Frank, I could talk to you forever, but we have to wrap it up. Final thoughts for investors watching?
We should make sure you have a 5% long in gold and silver, and you can easily buy called Kitco, because when silver was under $5, I remember when I bought thousands of ounces of silver under $5 and got it for Kitco. And you could buy that and at the same time buy good quality gold active money managers. I would stay away from the ETFs. That's a huge flow into it, and a lot of money going into that has nothing to do with underlying values of these companies. It just buys money flows, and I think it's smart to know good stocks.
So you like physical, you like holding physical.
I love 5% into gold or nice gold jewelry, and I like 5% into good quality gold stocks.
Nicely said. Frank, thanks so much.
It's great to be here.
And thanks for watching our special edition of Kitco News. Hope you enjoyed it. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Cambone. Thanks for watching.